There's one message inside this global outlook for banking and financial markets that matters in this conversation. Remember in the 1990s when risk management started leveraging technology to create architectures for Basel 1, Basel 2, so complex calculations and aggregations of analysis reports. Risk managers had this mantra. They said every bank employee is a risk manager because risk management is the core of a financial institution. Now, today, I think we need to say every bank employee must be an AI risk manager. It's so important that we understand how AI works, the advantages, but also the risks and the complexities, because we need to leverage this technology to transform the bank. And you see, it's not a battle of human and machines. I don't think AI will replace bankers, but bankers who are capable of using AI will advance compared to those who can't. So everyone is made responsible for their own benefit to basically become an AI risk manager.
Welcome back to Purpose Driven FinTech Podcast. I'm your host, Moni Millares. In today's episode, Paolo Sironi shares with us in plain English the findings of his most recent research paper, Global Outlook for Banking and Financial Markets, Regenerate Banking with AI, where he surveyed 600 banking executives about how they are working with generative AI. 78% of financial institutions are tactically implementing generative AI for at least one use case, which means AI governance is a must-have. AI is not just a buzzword. We cover how generative AI can transform the banking and financial sectors, why risk, compliance reporting, and client engagement lead the way in AI potential most critical use cases, making financial services accessible. Communication as a service, which this is the first time I encountered this concept as such, skills we need to develop as an industry to adapt and thrive in the world of AI, and of course, a practical framework to manage AI risk and implement successful AI projects. If you enjoyed the episode, please go subscribe, give it a like, share it with your friends, and reach out. I'll answer all your questions. Let's go for it. Hi, Paolo. Welcome to the show. It is a very exciting conversation that we're about to have.
Monica, thanks for the exciting invitation. I'm happy to share with your audience.
Thank you. And I think, just for everyone, Paolo just published what I would say it's a book. It's not a report. You can see it's genuinely a book about AI and financial services as such. Here we have it. And what I really liked about it is that you can see a ton of short reports online today, but sometimes it feels like it's just a lot of noise or it's just like repetitive and you feel a little bit lost. And what I liked about Paolo's report is that it is all in one page, not in one page, all in one document, very structured. It follows a nice sequence. It's easy to understand. It has case studies. So I thought it was worth going deeper into this conversation so that we can complement the book with your explanation as such.
Thank you. Effectively, this is actually the 2024 Global Outlook for Banking and Financial Markets. Is a series that is published every year from the IBM Institute for Business Value. I'm the global research leader in banking and financial markets, and I tend to discuss with my colleagues the economic models of financial institutions and reflect upon the role of technology in that transformation. So this year, that reasoning is intersecting AI and generative AI, but in the background, we always have the economic model of banks because technology makes sense when it is applied to a business function or a business need. Otherwise, discussing as abstract would not add value to anyone in the industry.
Exactly, definitely. Before we go in detail into the conversation, this podcast is about how we can build better fintechs, more purpose-driven fintechs. So what's your opinion on how we can build more purpose-driven fintechs?
It's a very important question. And the reason it is because I've been also authoring business literature in my professional life, and the latest one, Banks and FinTech on Platform Economies, starts from a foundational question, the question of value. What is value? If we don't define value, we cannot digitalize value. And I feel like many have distorted or not perfect understanding of what value is for the final consumers, first of all. And then out of that, how can we position technology and business opportunities, of course, to do a business, but bearing in mind that what matters is to create more value for the individuals. And what I also care about is that that value is not remaining at the level of the micro interaction, so fintech and consumers, banks and clients, but can also expand to the level of the ecosystem, which can be society or the economy overall. So I've been researching on a theory of value. My financial market
Ooh.
transparency theory in principles is meant to do that, looking at the platform economy to understand how in transparent markets, technology can help create value for the individuals in a way that it basically propagates sort of spontaneously throughout the whole ecosystem. It's so complex these days to have a perspective which is open, but at the same time allows to reconcile the privacy of individuals with the need for an entire ecosystem, basically to fulfill the broader society goals and scopes. And so I think that I'm addressing this in my literature. So value is, it must be at the core. We can have slightly different definitions, but starting from there, we basically understand that where we go to. And I think that this paper as well, the regenerative banking with AI has that somehow embedded in the core because it is a story about humans, people, employee, that interact on the platform economy with institutions, regulators in a way that the interaction between people and technology can basically generate more value for everyone.
Yes. And then I'll just go straight to it because exactly the keyword is value. And I love you're the very first guest that talks about value and the definition of value because if we don't have a definition, then we cannot generate value. It's as simple as that.
Yes. So now we may have to expand maybe in another podcast about this, right? But if you think about, for example, what banking can do through technology is to eliminate friction in client journeys. And there may be different friction that can be realized and different client journeys. One of the simplest one can be you pay with one click when you're on Amazon, basically use technology to enforce payments, which are instant, secure, and added value for clients who don't have to otherwise spend time in doing that element. But there's deeper value that is part of the industry that can be addressed also looking at technology. And that is basically there's a knowledge friction. The majority of people have a harder time in making financial decisions, which is the reason why banking is typically based on human relationships. That's the reason why, even though the majority of consumers also reported in this report currently like to engage on digital medium like mobile apps, looking at their transactions, accessing their bank account. But then in the end, we also learned that is one thing is executing a decision, and one is making a decision. So execution, a lot of people are asking for digital, but making a decision typically look at human relationships, which are complex, expensive. Also, bankers needs to be elevated. So now, if the foundational value of the industry is to share knowledge among the parties, how do you eliminate the knowledge friction? When you respond to this question, you unlock the biggest value that the industry through fintech can basically generate. And from there, I start, in particular in my literature, to discuss the transformation of platform economies or advisory networks and so on and so forth. So that's where I'm basically landing to going to the core of the problem to enable people to self-direct themselves transparently, being in control, and in being part of a fair treatment when they deal with fintech or financial institutions.
Yes. And then I love that you talk about knowledge because now it's been a year, right, since AI became the buzzword. But now it's not a buzzword, it's a reality. And I think, as a fintech, I think we as a community, some of us talk about AI, but we really don't understand it. And many of the banks or the fintechs, we don't have the capabilities because we're banks, right? We were not. AI technology companies. We are building the capabilities. So therefore, this removing the knowledge friction, I love that concept, removing knowledge friction becomes so relevant when it comes to AI.
Monica, there's one message inside this global outlook for banking and financial markets that matters in this conversation. I started my career as a risk manager. I was head of quantitative risk management in capital markets for 15 years. Then I built a fintech that IBM bought, so joined IBM some years ago. But I remember in the 1990s when risk management started leveraging technology to create architectures for Basel 1, Basel 2, so complex calculations and aggregations of analysis reports that risk managers had this mantra. They said every bank employee is a risk manager because risk management is the core of a financial institution. Now, today, I think we need to say every bank employee must be an AI risk manager. It's so important that we understand how AI works, the advantages, but also the risks and the complexities, because we need to leverage this technology to transform the bank. And you see, it's not a battle of human and machines. I don't think AI will replace bankers, but bankers who are capable of using AI will advance compared to those who can't. So everyone is made responsible for their own benefit to basically become an AI risk manager.
Definitely. That's a good message. So now let's go full on into the conversation. But before I do, just a little bit of context. Basically, we go back. You just released your latest research that it's the global outlook for banking and financial markets, regenerate banking with AI. And you surveyed 600 banking executives basically on how they are using generative AI. You added like some stats at the beginning of the report that says almost 8 in 10 institutions are implementing generative AI for at least one use case. And basically, what you just said, AI basically reflects concerns about risk and clients' relationship, and governance is a must have. So before we go deep into this conversation, can you expand? What is the one takeaway that we need to think about? And I think you just touched on it, so we can go deeper.
Something very important. Of course, generative AI is just one part of AI, so the conversation could be broader. In this global outlook, we focus more specifically on generative AI being the latest and greatest. So when it comes to generative AI, 86% of financial institutions worldwide are live or implemented to go live with at least one use case that uses generative AI within risk and compliance, IT development, other support functions like finance, auditing, HR, as well as client engagement experiences. But 8% only, I would say only of those have a systematic approach. That means they are working to implement this technology across all of the business domains of a financial institution. While 76% of the remaining are a bit more tactical. That means that are working on one use case here, maybe another use case there. So there's not a single story that dominates, right? It's scattered all around the place, a sort of where there is more sensibility inside the institution, basically budget or interest, they're focusing there in a sense, right? Now, why does it matter? It matters because we're not talking about implementing one use case only. We're talking about rebuilding the foundations with an architecture and a platform that allows to be AI plus, starting from data and AI, basically to box out from the existing complexities and intricacies and boundaries of business models for financial institutions that leverage fintech in terms of evolving their model. So working on an individual use case might make it hard also to justify the investment required to really manage this technology. And manage this technology means a governance which is not just in principles, but is grounded on architectures and platforms' capabilities to interact with the problem. So I think that on the one side, all the banks are working on it, which is very interesting. But on the other side, the majority is still thinking too tactically to really reap the benefit for every one of this new technology. Let's see how this unfolds in 2024. We'll be curious to see at the end of the year how many modify their approach to become more enterprise-wide and systemic.
Yes, and then I think everyone, like you say, that this is me not based on research. My assumption is that people are experimenting, right? Oh, let's try here, let's try there. But I think there's still not a clear understanding across all teams, across all levels within the financial institutions on what AI can do for us as financial institutions. So, can you expand on what are these multiple benefits or multiple use cases on how AI can help financial services?
That's actually interesting because AI is not a new technology. So generative AI only demonstrates the maturity of this technology. We've been also releasing a piece of research during World Economic Forum together with the research unit of Barclays Bank, as well as Barclays and the Institute for Business Value of IBM paper, looking at the lag between when innovation in technology occurs and when the benefit is generated on productivity on the overall ecosystem. So now this moment in time demonstrates that the technology is maturing. So it's not anymore the time for experimentation. It's the time for transformation with this technology at core as the new steam engine, put it this way. Now, there can be, of course, a variety of different use cases where financial institutions can generate value. I might talk more about financial institutions that cover a lot of fintech areas that individual fintech can see themselves inside this conversation. When we asked these 600 executives, all with responsibilities and decision-making responsibilities with data AI strategy, they would see the biggest benefits. 32% of them, which is the highest number, said risk and compliance. A financial institution is a risk management institution, right? And compliance is typically a heavy burden. So in a sense, not surprised. And that is followed by client engagement. So the elements of communication with clients, which is also super important. And then IT development and the other support functions. Now, that can be a ranking that might correspond to everyone's perspective or is just about the crowd. Every institution will have a different point of view. And the reason is because it's not just about looking at value. Every value comes with its own complexity and its own risk. And complexity and risk can be very different according to the use case in terms of how much open it has to be, what type of data needs to be collected, how, if you like, exposed you are with technology in front of final consumers. So it's the combination of these three dimensions: potential value, complexities of organization, technology, and risk, that is security, bias, and hallucination, that defines basically the trade-off between these three elements, and therefore helps you understand what it takes effectively to implement on a foundational governance model the technology in order to basically address a final user. So that means the fact that risk and compliance corresponds to, on average, the highest potential value doesn't mean that is the easiest to be implemented, right? Sometimes higher value is more complexity. So all of these elements needs to be considered. And in this report, Generative Bank with AI, we tried to initiate that conversation with the readers. Of course, it's just like preliminary elements because there's already 50 pages. You can't have everything inside, but I think it can inspire people in the way they think pragmatically about this type of innovation and transformation.
Yes, I like that. Think pragmatically. So, when it comes to compliance, can you give us examples of how we can apply AI?
Okay, so let's say generative AI can do a variety of things, but the one that is more flashy that everybody sees is, of course, talking, right? Is the large language model. So is the make believe of human language, right? That is strikingly advanced. Now, compliance is based upon a huge corpus of information that needs to be read, understood, reports that needs to be basically uploaded, compared. We already saw the capability of AI in terms of the more traditional models to work with document ingestion with large language models and generative AI that is basically elevated significantly. And so you understand that the way you can interact with that complex domain now is much, much more advanced than what it has been in the past. It's like the capability of the technology moved a bit at the time, then pop, jumped up like this. So in terms of compliance, that's one of the typical cases, which is basically understanding and optimizing streamlining the access to documentation and the understanding the comparison upon all of these. Then once you're inside that one, you have other elements which are fraud, anti-money laundering, which are not just compliance, is actually a foundational element of Financial Institutions Act. And that is where you see that generative AI can play both sides of the game. On the one side, you can better understand what goes on in a complex system based off multiple communications. But on the other side, actors could also leverage technology for make believe, so to impersonate individuals and stuff. So there's a lot of catch-up game here where you know that those people out there that have bad intentions tend to be more motivated to innovate fast compared to the others, which needs to be more, if like thoughtful. So it is important that all of this is addressed now because people are acting on both sides of the equation.
Yes, that is very true. We also need to think the bad guys are.
Well, one data point that amazed me watching the works during the World Economic Forum is in a panel, the CEO of JP Morgan Chase Asset and Wealth Management said how many hacking attempts happen and go unsuccessful every day. Attempts to break into the JP Morgan Chase system. You know what the number is every day? Is
No
it more
idea.
than 1 million? Is it
Yes.
more than 100 million?
Oh,
Is it
no.
more than 1 billion? She said 45 billion hacking attempts per day, and that's twice as much as the year before. Now, of course, that means there's a lot of automation here happening, right? And maybe not necessarily for private actors, which might have a different perspective, not just an economic perspective. All of this is super important on our digital economy. And therefore, we know that some people might want to use technology in a better way. We want to use technology in a good way, also to preserve the value that we are creating. Every banker must be an AI risk manager, period.
Yes. And then this makes me think everyone needs to think about regulation, right? Like we're regulated entities. So now, of course, I'm assuming all the regulators will start asking different questions, e.g., how are you protecting yourselves about super automated attacks? Now that you use this example, or maybe we're giving evidence for the compliance report, but it was AI generated, and they're like, how do I trust that your AI generated system is doing a good job, basically? How do you think that conversation with regulators will start changing?
That's always a dynamic conversation. In this respect, I
Yeah.
believe that the industry has the responsibility to be at the forefront of that conversation, right? And so basically, not just to leave it, but to start it because it's important for everyone. Happened also when risk management made the first steps forward. Regulation without a clear cooperation among all the parties can become a bit hard to, okay, and illogical. And it's not the fault of regulators per se. Sometimes it's a complex domain. And I think the industry has a responsibility to make sure that in an open discussion, all parties basically find the element in common. And that element in common is to make sure that a good work is done for the value of consumers in a secured way. And that's it, because that pays out anyway in the long term for everyone.
Yes, I'm talking about the final consumers. I think us as fintechs or as financial services, it's our responsibility. That's why we exist, right? To help people have better lives with money. Part of that is accessibility. And accessibility can be defined in many ways. One of them is make it easy for everyone to use whatever we're using, whichever service it is that we're offering.
Make it easy, it can be a delicate expression. So make it understandable. Okay. So
Understand.
that's why it has to be transparent. Sometimes a friction is needed to allow people to think. because if you think about elements like buy now, pay later, maybe it goes too fast. Okay.
True.
So
True.
the point, however, is what is that friction about? What is that moment of reflection? What type of value it creates? As long as it is transparent and allows people to understand more what they're doing, that means that we're all going into the right direction. Okay. So it's a collective effort for everyone. But then at the same time, sometimes it's too arduous for people to do that, right? In simple terms. So that's when technology allows you to access concepts, information, and ways of looking at a problem that otherwise you will be precluded from, right? So it puts you more in touch with the problem that you have to resolve.
Mhm. So, just to build on that, how could then AI help us improve the customer experience such that it has the right level of friction?
Okay, so let's start from a more abstract, if you like, so without getting into the details, to by representing how banks have been investing in technology to address a digital experience in the last 10, 15 years. Let's say that 10, 15 years ago, all banks started discussing the fact that they needed to be more proactive online and definitely as the smartphone came to life to be on mobile. So mobile technology is a digital technology by definition. I think the first thing that most banks discussed was how can I power up the mobile app in a way that it works fine. So that became primarily a shift to cloud. Okay, so
Mhm.
you need to use cloud because now you're operating with mobile apps in very different ways instead of allowing for access to on-prem technology. So it's a cloud discussion. At the very beginning, banks were very concerned about cloud. They learned also regulators that can do that, so they accelerated. But just lifting and shifting a banking experience on cloud that doesn't mean that you're delivering a good digital experience. And that's when the understanding that the data was relevant to make it more personalized became everyday discussion. So that is when artificial intelligence, machine learning, sometimes deep learning, natural language programs. So that type of more traditional AI, if I can call it this way, came to the forefront of investments and discussions. However, there is still a complexity here or a delicacy. Not only the net promoter score of banks hasn't really improved significantly, and is concerning. It's not top of the industries, but the majority of people have a harder time of interacting for the most important decisions with a digital medium. As I mentioned before, and let me reiterate it, what is digital technology? My iPhone or your Samsung? This is a technology to demand. People don't go on Amazon to see what happens. They go there because they want to buy one of my books, and they can also likely find for free this report. There should be an Amazon link. But the most important actions, which correspond to the most important revenues of financial institutions, operate in an offer-oriented framework and an economy where banks push to clients, insurance push to their clients' financial products, and their capability is somehow too overwhelming because people have a harder time in understanding, right? So now, if you want to elevate people to use digital technology with a good experience to be more autonomous, what you need to do is to create better element of communication. And that's when you see that now we go from cloud through traditional AI into generative AI because generative AI is about communication. Of course, we need to make sure that every communication element is framed within clear transparency and compliance framework in a way that the people are not, if you like, hallucinated or that you don't generate a fear of missing out. That's always important. But in any case, that was the missing point. And that now we start to see that it is coming to life. The possibility to personalize through communication the decision-making necessity of people when they interact with a mobile app and they don't necessarily have another type of interaction with a banker. Still some work to be done, but for the first time we see that is basically conceivable.
Okay, so I have a very basic question. As I was reading through the report, there's a section that you talk about communication as a service, and you also make reference to decision making. And I was like, oh, I'm a bit not confused, but I was like, oh, it's the very first time that I hear the term communication as a service, especially within financial services. So if I paraphrase, let's see if I understood correctly. If I paraphrase what you just said, it's basically communication as a service allows us to use all the information that we have about customers, all the capabilities that we have, such that we create better understanding from a customer perspective on what are the interactions that they are having with us as financial institutions and with their money.
I would say on both sides. So the researchers of the European Central Bank a few years ago wrote a paper titled Financial Intermediation with Technology, What's Old and What's New. They also leveraged the My Banks and FinTech on platform economies to create the banking invention quadrant axis. What they said is that financial institutions exert market power when they excel in information and communication, which are the two axes of the quadrant. So what's information, what's communication? Information is about all the data about a client that typically reside in the core banking of an institution. You can think about the adverse selection. So basically identifying who is worth it for credit and for how much, or information about payments and transactions around payments that basically identify elements of knowledge around the customer. And if you think about in particular the European banks, but you can expand across the world as this is a mega trend. But in Europe and in Japan, banks had a harder time in generating business value through information, the core banking elements, because of very low interest rates, very high credit risks. So now interest rates go up, the credit risk increases, so it's more complex. So that's when the European Central Bank researchers said that there is a shift that is clear in Europe that moves from information to communication. Communication is people talking to people. It typically goes around more complex decisions for your loans, right, mortgages, or investment products for retirement, for opportunities, or insurance. It can be life insurance or something else. They typically are very asymmetrical because the domain of expertise is much larger and deeper, and it requires more, if you like, thinking. And that thinking typically is done people with people, right? So now, it is difficult to scale up that communication element. And how do you basically allow all of your network of employees working in a bank to be elevated enough in order to make those conversations in a way that are effectively impactful and get it through? So now, if you like, systematization of communication has always been complex because it's human related, but now they can be elevated. And I'm not saying really it has to be substituted, because there's a lot of use cases where employees can be helped basically to have a better conversation with the customers because they are elevated to understand faster, to master the domain of expertise. And that's where communication as a service becomes important, if you like. It is where the bank also addresses the bulk of the most complex decision making that can happen in society at the micro or the macro level.
Okay. I followed most of the conversation except the last sentence when it comes to decision making.
Mm-hmm.
Can you re-explain / paraphrase the bit of how communication as a service helps with decision making?
Okay, let me tell you, the biggest problem that many fintech had is that they misunderstood the capability of people to self-direct themselves. So they misunderstood the role of human relationships. And I can do this in a very simple way. Looking at the main business model of a bank, there are 4 areas: payment, credit, investing, and insurance. And I mentioned them in order of asymmetry of information, so the complexity of the decision making. Payment is very simple. You click and buy your Gucci bag. So as long as it is convenient or fast, you do it. That's why the biggest unicorn in fintech started in payment. It's the paytech, right? It's a volume business. Actually, it should be an Uber volume business. Take it. The second, next to this one, which is still very symmetrical, is credit. And it is very symmetrical because you get money, right? And so if I tell you, Monica, go to my IBM.com/IBV, where I host my IBM papers, click on the first page, and I will give you $1,000 free of fees, 0 interest rates. You give the money to me whenever you want. You may do it. Many people may do it, but maybe some of my IBM colleagues as well. And I'm not sure about the credit worthiness rights. It becomes a big risk management problem. Unsecured lending, buy now, pay later. Goldman Sachs with Marcos, they made that mistake. It's not about giving away money, right? But it's giving away money in a way that It's good for people. You understand the risk about that because some people will have problems in the end, but it becomes a bit more complex. But still, people can go on it. Credit tech was the next to follow because people get the money. But when it comes to investing, it's a very different problem. Let me say, go back to the website, click on it, and you will give me 1,000 of your dollars, and I will invest that into a model portfolio made of cryptocurrencies, European stocks, and Chinese stocks. Now, many people in the audience will ask, is it true that Paolo worked in quantitative finance? Did he read books on portfolio theory? So there is a gap, right? People need to trust them. They may have a hard time, the majority of people, to understand how to make the decision. So they need to trust the conversation. They need to trust people when they make the decision. And that's the reason why typically that is not a mobile thing. The execution maybe, but the decision-making process requires trust among humans. And I give you the easiest example, which is insurance, the most asymmetrical of all, because it's not even about risk, it's really about uncertainty. Think about life insurance. Monica, I want to sell to you a life insurance contract. So I need to tell you that you're going to die. Now, I'm sorry for that. And I guess you might not want to have that conversation with ChatGPT. You prefer to talk with me, right? So that means when it gets deeper into you're facing uncertainty, which is the core of banking, that is when communications or relationships become more and more important. Mm-hmm. Now, even though communication can now start working on, technology can start working on communication, still the human element is foundational for bridge that trust gap. But many more human conversations can be elevated, right, in a way that they are accessible for people. And that is really the hard part to be digitalized. And that's the reason why it is not so easy to digitalize investing in insurance compared to payment and somehow credit. Past, if you like, auto insurance, if it's compulsory, it's compulsory. Yeah. Still, 90%, if I'm not mistaken, of Italians still prefer to talk to a broker. And in our research, we identified the reason why people act this way. Only in the UK is the most advanced market in terms of mobile access. 60%, if I'm not mistaken, of consumers buy auto insurance, which is compulsory, more or less all equal, online, instead of talking to a broker, but still a large percent of them talk to people. There are elements, some of the reasons are revealed also in this Regenerative Banking with AI paper, and they're worth understanding because that's where the next frontier lays in terms of digitalizing financial services, communication.
Thank you. Thank you for expanding because now I understand. Thank you. And I'm sure listeners will understand as well. So I want to change the conversation a little bit and move away from customers and tech and move back to people, like the people working in financial services as such. So there's this conversation of fear and opportunity at the same time. Fear that you will lose your job and opportunity that will it make you a superhuman. So what we could have the debate, like I am more of it will make you a superhuman, you have to embrace it. That's it. But you talk about reimagining the workforce experience as such, boosting productivity and rebalancing costs. What does that mean?
First of all, of course, technology, like every technology, intersects the way we work. And in some cases, transforms it to basically replace it, right? So things that we were doing before by hand, we now do in a different way. But I do believe in the majority of cases that it is not that AI will replace bankers. The key point is that bankers who can use AI will advance more and faster than bankers who cannot use AI. The same, now everybody asks you, whatever level of job you want to have, if you know how to use Excel, right? So some elements becomes, if you like, in and out. So learning how to use AI makes a difference among people, and people that don't know how to use AI basically will be precluded from opportunities. When we look at the economic model of banks, we looked at globally, all banks with more than 50 billion of total assets. The operating expenses have been growing over time. There's also an inflationary element, but effectively they've been spending more. But the portion of money which is utilized for employees compared to the one invested in technology grew as a percentage of this basket more than the technology one. And I think it's important because it's about people, but that creates always a tension in institutions because how much can you turn efficiency into cost reduction as the cost income is really unsustainable for many banks out there. And so the point here is where can technology allow people to contribute more and better to the success of the institution, also as an element of self-fulfillment. So all of those elements are important that at play when it comes to unlocking the value through technologies such as generative AI. Now, there is a very interesting data point inside this global outlook that I wanted to reveal here in this podcast. We've been asking as the IBM Institute for Business Value 3,000 executives every year since 2016 about which are the skills which matter the most for the workforce. And we identified 14 of them. And in 2016, the top two were STEM, mathematics, engineering, high-level computer science, and basic IT skills. And then were followed by down creativity and other elements like team workability stuff. We asked the same question in 2023, and where STEM skills rank
Way lower.
14.
Ooh,
There's always a
not
wow, right? When I
Ooh,
say that.
yeah.
And now, and people think that, oh, an engineer is not creative, so creativity goes up. Creativity is still there, mid of the ranking. What went up is the ability to prioritize, resolve complexity, and teamwork ability. Why is that? This is not to be seen as a static picture. It's a flux, right? It's not that STEM is not important, but I think that the industries are realizing that if they don't resolve the complexities of the way they worked before, adding new talent will not move the needle. Actually, this talent will be precluded from contributing. Many times people say, I'm frustrated, I was hired, I had this ambition, but then I cannot work. And the same goes with advanced technologies. If you don't resolve the complexities of the operating model, you can plug in more technology, but you may not resolve it. Actually, you can even reach an event horizon, we're saying in this paper, very fast. You add capabilities to develop on complex systems that lost causality from their origins at the original business purpose. What happens? You can even go faster in building complexity. So it is super important that the operating model discussion is at core of this transformational moment, because only by addressing those, the rest can go. That's why I think that there is a higher request for understanding how to prioritize, how to work in teams, how to plug in those capabilities that start transforming the core of the complexity of the operating model so that the rest can effectively add value. For the good and for the bad, everything is on the table. Okay,
Yes.
all moving parts, so nothing is left behind. Everything needs to move at the same time.
Yes. And I think that's something that we all need to be comfortable with, uncertainty and change, because it's just accelerating. The pace of uncertainty and change is just, it used to be just for fintechs early stage. Now it's everywhere.
Yes, the global outlook 2023 was certainty is the only certainty in essence, right?
Yes,
Also
exactly.
on the global stage, what matters is to be transparent as much as possible, because transparency builds trust, right? You will not resolve uncertainty, so there will always be question mark open. But when you know transparently what is the effort, what everybody wants to do, so then you're more inclined to participate, right, and to contribute. Otherwise, you feel left out, and that's not good. Nobody should be left out.
No, exactly. So I'm very conscious of time. This is a fascinating conversation. Probably it should be like a 3-hour podcast. But then if we think about, you use the word pragmatic at some point in the conversation. If we are like, okay, I listen to you guys. You've been talking for almost an hour. Can you give me a summary? What are the steps? How can I be pragmatic? And what can I take back to work when it comes to thinking about implementing AI? How do I exactly simplify the complexity, work with a team? How do we do that?
Okay, so first of all, we said that every banker must be an AI risk manager, right? And that is needed because risk management, the governance is to work end to end. There are four principles that matters. First of all, bankers have to manage for value more than ever. They ask themselves where value can be generated by the application of technology. Then they have to manage for complexity of the innovation. Sometimes it's not feasible or is very complex to be implemented for a few reasons. Technology, maybe you don't have a data access that matters. Maybe you cannot create transparency across the algorithms. Maybe you have an organizational complexity, so you have to change the way people work and you're not ready for doing that. And then you have to manage for risk because cybersecurity first, we are expanding the vulnerability space. So we need to make sure that we also plug in the capabilities to make everything more securely. And on the other side, there is always the risk of bias and hallucination, especially when technology is used and it can go viral. So they need to be considered first. So managing for value, for complexity, for risk enables to the four to manage for scale. Because as we said, this is not just a use case by use case, is about AI plus. So putting AI and data at core to change the way we work, to unlock everyone's potential, talent, employees, clients to participate into the banking journey. So we crafted a 10 guiding actions, if you like, chart that basically helps to visualize and conceive what has to be done every year. Is like a recursive process. Looking at AI, some example of Gen AI, but is everywhere. Because first of all, there is always an element of exploration to understand the priorities that the bank has. Again, is not technology in isolation. First of all, which are the priorities of the bank and how AI intersects those priorities. Then is about how to integrate at core data and AI inside the operations. Is not a use case in isolation. You can start with, but you need to understand quickly how basically you can work on it systematically by allowing some space for maneuver in areas which are a bit more on the frontier. There is always something which is a bit more on the frontier, right? That cannot fit the process of standardization. And so that's where effectively you learn by making, and you need to create a feedback that enables you to quickly understand how you can further improve your governance and architecture. And then is when you start scaling with AI, basically get into an AI plus framework. So it becomes a scale up approach where you are building in progress your AI factory. That means you elevate every colleague to understand AI, the risk management of AI, and how to risk manage with AI. And then you ground it on a platform that enables you to further contribute and to restart the process to make it better. It's a continuous process of building culture. It's just that the operational culture now starts with AI and it's not executed with AI only.
Yes. Thank you so much for explaining basically the book in plain English and words. I think it makes a great complement. You should even think about having the audiobook, not like reading the book, but explaining it in your own words, because it brings it to
Reading
life in
research
such
as a service.
yes, exactly. Because it brings it to life in such a different way. It's, oh, I read it, but it's complex. It's new concepts. It's new language. But then speaking with you, it's, oh, now I understand better. So I love this conversation. Thank you.
So I'm grateful for this opportunity. Everyone can download a free copy of our research. It's on the ibm.com/IBV, and then there will be the banking and financial market pages. I hope you can also add the link to this podcast.
Definitely.
And I invite everyone to listen to this podcast. Monica's podcasts are the greatest and latest in terms of understanding technology and business transformation. So happy that I can do this reading together here with you and your audience.
Thank you. And I'm even actually, I am creative and I like studying. So I'm even thinking, hey, I'll create a mini study group so that we read the book, we go through the podcast, and then we discuss.
Monica, that word you use resonates to me. People don't have time to read anymore. Even platforms like LinkedIn became very short posts, not articles anymore. In the media, you get the image, everything shrinks to the limit of a tweet.
Yes.
But reading is important. And you know what? Even people that read not necessarily study. But it is about studying as well, dividing
Yes.
element and element, getting a deeper understanding. That's why I always like to share printed copies of the material because I think that, again, reading on paper slows down and we need to find time to study. That means slowing down our interaction with the problem. It is super important. Adding a bit of a friction, slowing down our reading time adds value because we all of a sudden study, don't simply read.
Yes, no, totally agree. That's what I've been doing lately. My previous book, I bought the book, highlighted the book, and now I'm taking notes about the book. I'm studying the book. So I think I'll do the same with your book. It's been an absolute pleasure having you in the show, Paolo. One very last question. This is the universal question that I ask at the end of this podcast that by now it's becoming a tradition. So, if you could change one thing in fintech to make fintech better and have positive to customers, staff, and investors, what could that be?
Don't think as a startup, think as a scale up. Because this is not about optimizing venture capital money. And I know it's difficult because you need money, so typically you have venture capital money. This is about contributing to the transformation of banking, which is a core industry that goes across every other element in our society. If we can make banking better, I'm sure that we can improve the quality of all of our other economic ecosystems. But that requires a scale-up mentality, not just a startup mentality.
Definitely. I love it. I also think about that all the time, that it's money touches every single industry. That's why it's so important. So that's why we have people passionate about it, like you and I and many others. It's like we can count. It's been an absolute pleasure. Thank you, Paolo. Thank you so
Thank you
much,
very much.
everyone. Thank you.